Welcome everybody to the third installment of Mortgage Mondays with Manny. I'm going to go live on Instagram. We're live on Facebook. So everybody be prim and proper. Like I said, welcome. In this evening's segment, we are going to cover something called a debt service coverage ratio loan, or as we call it in the industry, the lingo is a DSCR loan. Okay, I'm going to bring up a presentation right now, guys, for you to take a look. Let me share my screen. So this is a debt service coverage loan by definition, right? So this is what it pretty much is what it sounds. As long as the debt is being covered by the income in the mortgage world, that is pretty much a go. So the rent must be covered by the income. So if your rent is $3,000 a month, you need to be taking in, your mortgage payment can't be more than that every month. Okay, I do have some with no ratio. We'll go over that in a minute. But again, a good DSCR loan is where the expenses are covered anywhere from 1.25 to 1.5%. Meaning, if I say a ratio of 1.5, that means that your expenses are covered, 1.5 times by the income. Next slide. Okay, so here are some of the key highlights for everybody. No personal tax returns are needed. No ratio DSCR available, meaning if your rent is not covered, if your rent does not cover the expenses, we're still fine, guys. You do need a higher credit score for that. And there is some more program parameters. You have to put down a little bit more money. But again, keep in mind, you're not knocked out of the game if your rent does not, if your rent is not covered by the income. All right, if you're off by a little, if you're off by a lot, I do have a no ratio. Okay, again, that meaning if you don't have enough income to cover the expenses, you're still good to go. Max LTV on a purchase or a rate and term refinance is 85%. Max 75% on a cash out refi, and 640 minimum FICO just to get in the door with this. And I can close in an LLC or a corporation. All right, you can close personally, but probably out of 1,000 loans, maybe one person closes personally. And in the past, I'm going to say 3 years since we've been doing this aggressively, I've had one person close in a personal name, obviously for personal reasons. But again, those are some of the key highlights that you could keep in mind. Again, no ratio available, max LTV of 85% on a purchase and a rate and term, 75% cash out on a cash out refi. Typo, I apologize, guys. Didn't use my chat GTP. And can close in an LLC or a corporation. And again, guys, fill up that Q&A, put your questions in there as we go along. I'm not going to answer them now. If you've been on here before, I'm going to answer them after I go through the presentation to give you guys time to formulate your questions. Again, fill up that chat. No such thing as a silly question. Took me a while to learn these products. I'm sure some people have questions. Load up that Q&A, guys. Next one. Highlights. Okay, so here's the eligible property type, guys. 1 to 4 residential units. I can do condos, both warrantable and non-warrantable. What does that mean? That means that the condo numbers are a little off. When a condo is non-warrantable, that just means that you can't go conventional, which doesn't make a difference to us anyway, because we're not going conventional. This is not a conventional loan. It is a loan that is what they call non-QM. It's a non-qualified mortgage. Pretty much in layman's terms, it's not being sold to Fannie Mae or Freddie Mac. All right, there are other investors that buy them from us, but it's not going to Fannie or Freddie. So whether the condo is warrantable or non-warrantable does not make a difference for us. 5+ multifamily, very big right now. We're doing a bunch in Queens, Brooklyn, Bronx, Manhattan. That rents are still through the roof. People are still buying these investment properties, and the DSCRs are working out very well. We all know Manhattan just hit a high in the median rents last month, according to CNBC and some other stuff by Realtor.com in a report I read. So still hot and heavy in the boroughs, guys. Mixed use, again, for those of you who don't know who mixed use are, if you go to any Queens or any of that, you can go and see store on the bottom, a bunch of apartments up top, and you can do a mixed use. So mixed use, again, very popular where I am. For those of you, mid-America on here, might not be as popular, but again, very popular here in the boroughs. Again, mixed use, store on the bottom, anywhere from 2 to 100 apartments above it. Next, mixed use. Okay, I'm sorry, commercial. Commercial is just what it is, whether it is a warehouse, we're doing light industrial, we're doing regular office space, we could do self-storage units, and again, conglomerative properties, not farms yet, but normal commercial we could do on this, guys. And again, as long as the rent is covering the expenses, you're good to go. Now, keep in mind, when it comes to mixed use and commercial, guys, have to have a debt, so and the 5+ multifamily, those are where you need to have a ratio of what we call at least a 1.2, meaning, you need to be getting an income 1.2 above the expenses. Okay, so pretty much meaning, let's say I'm going to use simple numbers here. Actually, I have an example coming up, guys, which you could take a look at. But again, mixed use and commercial and 5+ family, you cannot do a no ratio on. Okay. Next, how do you calculate the DSCR? Take a look at this, guys. Screenshot it. This is important when you're looking at it. If you want to learn more, I'll leave it up here for a minute. If you want to screenshot that just to get an idea. To calculate the debt service coverage ratio, you're going to need to determine the property's net operating income, or the NOI, and then you divide it by the total debt service payments for the mortgage. So here's an example. If you want to finance a commercial property using a DSCR, property generates a net operating income of $100,000 per year, and then it has an annual expenses of about $80,000. Now, in order to calculate that DSCR, you're going to divide the property's net operating income by the annual debt service payments, which in this case, $100,000 in income, $80,000 in expenses. What do we get if you do that math? Again, 100,000 divided by 80 gives us a DSCR ratio of 1.25. Again, meaning very simple math. The debt is covered, is 25, the income is 25% over the debt, if you want to look at it that way. That's the way my brain looks at it. You guys might think it's something different. Sometimes I look at things a little bit differently, but again, the income is about 25% over the expenses. All right, so that gives us a ratio of 1.25, which again is the ideal ratio for your 5+ units. It's your ideal ratio for your commercial properties and your ideal ratio for those mixed uses. When it comes to 1 to 4 unit property, guys, and condos, I can do a no ratio. That's for those vacant properties out there. That's for those individuals that might be rent controlled over here in New York. I know that's huge. Or that might be for somebody that is in a 3-family, or it's a little bit below market right now, but they still want to get it because, I'll give you an example, Airbnbs. A lot of people are buying Airbnbs. They're not doing it for the monthly rent. They're doing it for that's maybe that summertime rent, or that seasonality. For those of you who live on the island here, like myself, you have the Hamptons, you have Fire Island. In the summertime, they're getting anywhere from $400,000 to $100,000 a week to rent these things out. They're not interested in the monthly rent. So when you do a new ratio on a investment property that is a 1 to 4 unit, you're probably in a seasonal area. You're probably doing what we call a short-term rental, which is allowed, and that's where the no ratio comes in. Okay, moving on. Occupancy types, very simple, guys. Occupancy types, there's only one way you could do it, either a short-term rental or an investment property. If it's not an investment property, guys, you can't use this for primary, you can't use it for second homes. It has to be a short-term / seasonal rental, your Airbnb or your VRBOs, or an investment property. That is all that is allowed. Okay. I threw in foreign national because we use foreign nationals for the DSCR. For those who don't know, foreign national program, again, is the program for people who are not U.S. citizens. They're able to buy property here in the States legally, as long as they have the money to put down. They could either prove income or they could use the DSCR program. So that's how the foreign national fits into there. I wanted to touch upon that, and I wanted to give you guys an idea that we could use that as well. Okay, here is my contact info. Screenshot it, you have it. There's my mug. I'm going to leave that up there for a little while. We only have one question. Come on, you guys can't be experts like that. Do you fund cannabis companies looking to expand their businesses and buy more commercial space? Gary, that is a great question. Yes, we do. I have Jeff here. Jeff, how many cannabis properties do we have going on right now? How many cannabis properties are we trying to fund right now? I have in the pipeline 3 or 4 at least? At least 3, a lot more in the pipe. We do have a funding source for that, guys. Cannabis is becoming a lot more friendly because of a lot more states are allowing it to be legal for recreational. Okay. Daniel Perry. I have a single man, first-time home buyer, came to me asking if he can get a pre-qual from us like he would from a bank before shopping for a new home. Do we do that? Daryl, of course we do. We have to. Otherwise, realtors will not look at him. Realtors will not put him in the door. Again, guys, keep in mind, we also do conventional. I'm going to touch on that in upcoming Mortgage Mondays. But keep in mind, we do conventional deals. We do a lot of other types of mortgages, but I like to keep it separate, and go over one thing at a time because we do have a lot of affiliates on here that are sending us mortgages to do. So I like to go over it so they learn and you guys could speak about it, intelligently and with confidence. And if you're going in with confidence, that means you can sell with confidence. If you have confidence, you're going to make more sales, you're going to get more deals, and more deals equals more money. Okay, so that was Daryl. Daryl, I answered all that. Any more questions, guys? Come on, it can't be that easy. You let me off. Let's see if we have anything on Instagram Live. Nothing, just join. Okay. Would like to answer a question. Done. Okay, that's it, guys. No more questions. This was easy, guys. Again, we'll go over a few more key highlights just to keep you guys in mind. Key highlights, guys. Don't need any personal tax returns. All right, there are DSCR ratios of 0 available on residential properties. In addition, we can go up to 85% LTV on a purchase, meaning minimum 15% down. Max on a cash out is 75%, meaning you have to leave 25% equity in the home. Need a 640 FICO to get in, and you can close in an LLC. Okay, Q&A, let's see. Do you have a cap on the amount you lend for a multi-unit New York City purchase? Daryl, we've gone up to $25 million. I also have individuals that have, when it comes to commercial, that's the only thing I don't bank. Anything over 30 units, I don't bank. But we've closed loans upwards of $25 million with one of our investors. Answered. Do you do nonprofit asset acquisition like churches buying their own building? Jeffrey, what's the answer to that? Yes, we do. We just, that's funny. We just unrolled that program this week. My partner, my associate, Jeffrey, you guys can't see in the background. He's worked very hard to find an outlet for those. And yes, we do churches. We can do churches. Actually, we got our first couple of deals in now. After a week, there is a need for church financing, and we do churches. Jeffrey, I feel like you did a plant on that. All right, good. And we do have details, guys, emerging. Set me with those scenarios. That will be a whole different Mortgage Monday, where we're going to have Jeff Broom as our special guest going over it because he is the church expert. How do we submit deals? We have a portal. So if you don't have a portal to submit a deal, please email me privately. I will send you out a link and you'll sign up and we give you a portal. The portal is used for a couple of reasons, guys. It keeps track of your leads. It gives full real-time reporting of the leads that you give me and my crew. And I always say, I'm only as good as the people behind me. You can't see these desks, but there are 20 desks filled with individuals calling your leads. So you have to put them in there this way. A, you know what's going on with them. B, we don't lose track of them. And C, the most important thing, when you close a loan, whether it's a business purpose loan or a DSCR loan, we're able to pay you that referral fee and for your marketing services. Okay, do you pre-qualify real estate investors? Dan, of course we do. Again, real estate investors need to be pre-qualified as well. Again, because they also want to know what they qualify for. And every realtor nowadays I don't know of any realtors that will show a property if the potential buyer is not pre-approved. So if you're not pre-approved, you're most likely not going to be able to get into that house. Okay, so get me pre-approved. I don't care if you're 6 months out, 6 years out. Let's get it in. This way, if I can't pre-approve you now, I could coach you and give you guidance on what we need to get you pre-approved. All right, that's a big part of my business as well. I have a lot of clients that 6 months ago, they came to me, we couldn't get them done, whether it was credit, whether, it was income or just not finding the property. We're able to tell them why. We have credit repair people. We have a bunch of people on our side that will help us, get you approved if there's something that can be fixed. So yes, short answer, we do pre-qualify real estate investors, a bunch every day because investment properties are what I like to say in vogue again. Are your interest rates much higher than compared to a bank? Gary, I am a bank. Okay. We're a fully licensed bank. Like I said, we do conventional, we do FHA, we do VA. We are a fully licensed bank. They're higher than conventional. A DSCR loan is higher than conventional, no matter where you go to, but I am competitive no matter what my program is. If you compare me to that competitor in that space, we're either extremely close or I can beat them. It's very rare I'm that far off where we can't make a deal. And if I need to make a deal, I will. Everybody will take a haircut, but we'll get it in, we'll get it done to make sure the deal is done. But again, my rates are extremely competitive per program. But I will say, do not go comparing me on a DSCR to a conventional loan at Chase, because I will lose, but that's comparing apples to oranges, as the saying goes. Not even the same program. If you're going to Chase, you're proving income, you have tax returns, you have documents up the yin yang, you're giving them paperwork for days and signing over your firstborn. With a DSCR loan, that's not the case. So the rates always will be higher. If you want a guideline, I would say the average rate is anywhere from 1 point to almost 2.5 points higher than conventional, depending on credit score, how much they're putting down, and what their DSCR ratio is. So to give you an example, if you're buying a residential property that has a DSCR ratio of 1.2, which is a good ratio, that means that your rent is covering your expenses. You are going to get a better rate than somebody that has a DSCR ratio of 0.5. Okay, that pretty much means their income is only covering half their expenses. It's a higher risk for me, the bank. And what does that mean when you have a higher risk? You have a higher rate. So the more the risk, the higher the rate goes up. The lower your credit score, the higher the rate goes up. The less you put down, the higher the rate goes up. But again, if you have a client, I will explain this to all of your clients. We will pre-approve them. We will give them a rate, and we will give them, to the best of our knowledge and the information we have, as close to a rate as possible that they can get. Can you help retired folks who like to get out of a reverse mortgage? Yes, we can. That would be maybe conventional. That would be a bunch of ways. Jeff, if you want to, privately send me that scenario. Again, reverse mortgages is another segment we're going to have one day. I'm going to have a special guest on that. I know about them. I'm not an expert on them, so I'm going to have somebody that can help with that. But again, yes, I can help them. It's all going to come down to if they can prove their income. Because when you do a reverse mortgage, it's a ratio, just like DSCR. So they may not have the income to prove. They may be on a fixed income, and that's why they're in a reverse mortgage to begin with. So the usual problem I run into those is the fact that their debt to income is too high. But again, I'll look at it. I'm always here to help people. I don't mind helping people. So give it a whirl. And again, to everybody out there, you're never going to waste my time in a scenario. Keep bringing them. Don't think I might get mad if I look at a scenario and it doesn't work out. Guys, that's what I do. This is the life I chose. I look at scenarios that don't work every day. All right. For every 10 I look at, 3 scenarios are good. Why? Because people just send me everything. It's okay. Let me sort it out. Look like you're fishing. You're taking as many fish as you can. You throw away the small ones. You keep the big ones. That's what I do. I'm not going to get mad if you send me a small fish, guys. I'll just throw it back. Let it live its life. Okay. Retired folks, I answered that. What is the average commission made with you guys when getting a loan approved? Gary, email me that privately. I'll go over some numbers with you. It's all over the board depending on program. That is part of our affiliate Zoom. All right. If you email me, I'll go over all of your commission structure that you have signed with us. And a lot of people on here have agreements, but send it to me. We do have a marketing services agreement with a lot of individuals to pay them on the business loans. So hit me up. Everybody has my cell phone. You guys saw let me bring it up again, just as we're ending this. Share my screen. Bear with me. Hold on, guys. Let me share it. So you guys can have it. This is my contact info, guys. Hit the QR code. It gives you my Instagram, my email address, the office address, gives you all the pertinent information to get in touch with me. Okay. I am available a lot. Now I'm going to look at the Instagram live, guys. Let's see. I'm a real estate agent in Jersey. How can you help me with my business? So Shaka Tone, hit me up privately. I'll see how I can help you. We do have a lot of realtors that we help, whether it's getting clients that don't qualify in there, whether we help them, with Shania. Shania is a marketing individual here that we just brought on board, a rising star here. She can maybe give you some marketing ideas as well. We could attend seminars. We could do Zooms for you. We could help you with events, attend events with you, talk to your clients with you, see if they qualify. So there's a lot of ways I could help you. Hit me up privately. And, we could discuss more how we could help you out. Apex Home Inspections, best inspector in the world, guys. What are your thoughts on the outlook of the interest rates? I think they're going to say steady for a while, guys. But I think, out of the silver lining, out of some of these banks going down, a lot of you in Long Island, my home area, Signature that has gone down, and to all of you maybe who've been affected by it, I know the government's making you whole, but I'm sorry if you lost money. Interest rates because of that are most likely going to go down a little bit in the short term. And, in the long term, they have to go down. They're too high right now. So just, I'm not an economist, I don't have any degrees in that, but I just know normal progression and full circle, the ups and downs of a market and the cycles, rates have to go down, I think, in the future a little bit because of all these banks going down. In the long term, I think they're going down a lot. So again, guys, you might hear that saying a lot. You marry the house and you date the rate. You can always refinance. And if you did your original purchase with me, the only thing you have to pay for if you refinance with us, which I want you to, you do not pay any more origination fees or any more points or any processing fees. And we sign something to you and give it a closing. You still have to pay title fees, escrow fees, but we make it as cheap as possible for you to refinance because, again, we know the rates are going to go down. Okay, we have another question. How about business loans? That's still a possibility, or are we just doing mortgages only? No, we could do business loans as well. We do them well. I have a whole nother ancillary business to this. Go Accredited, that does the business loans. Merchants Property Solutions does the mortgages. The accredited group, or Go Accredited, which is the business loan division, they do the business loans. Good Guys Contracting, are the DSCR loans typical 30 years fixed? Yes, we could also do a 40-year, Mr. Ferraro. First 10 years are interest only. And you could either make it a 20-year or a 30-year loan. You can do an interest only also to make it stretch it out. But, I only give everybody 30-year fixed. DSCR loans have anywhere from no prepayment penalty to a 5-year prepayment penalty, all depending on the rate you want. So if you're looking to do a flip or you're going to get in and out, make some money, obviously you take the higher rate. But again, they're higher. The prepayment, or the longer the prepayment penalty you take, the longer or the lower the interest rate is. So yes, to answer your question, short answer, David, They are all 30 years. You can do a 15-year, but most people don't want to for cash flow. We could also do a 40-year interest only if you'd like, but the most common people take is the 30-year fixed. Very good. Any more? Thank you, sir. Okay, BV. So guys, that looks like we're coming to a conclusion. 35 minutes, not bad. I'll give you guys a couple more, another minute to type in any questions if need be. But like Apex said, guys, I do anticipate rates going down. I'm doing this 23 years. Rates go up, rates go down. When I got in, as a young whippersnapper back in the early 2000s, 2000 to be exact, rates were at about this. But the market was changing. There was a lot more different programs, a lot more exotic stuff, a lot more riskier stuff. Right now, there is still some what we call exotic mortgages, non-QMs, but they're not nearly as aggressive as it was in 08 or 09. There were people giving people 580, 106% financing. It's crazy. Those not there anymore. Miscred, click on your phone. You can click that QR code and that will give you my contact information. It'll pop up. So just pick up the camera on your text, on your cell phone, put it at that, and you can see all my contact information. The barcode scan does not seem to be working. Okay, so what I'm going to do, everybody, I am going to send a text to everybody on here or an email with all my contact information. I don't know why it's not working. And I can't. Caesar, let me see your phone a sec. Open up and see camera. Hence the perils of going live, guys. Google Lens. Okay, hold on, Caesar. Camera, let me see. See, I can't check now, guys, but I don't know why it's not working. It works. David Perry, it works. Google Lens. Let me see. Hold on. Let me just see reverse. It's working for me, guys. Maybe because my camera was in the way, guys. If my photo is covering any little bit of that, it's not going to come through. But it just came through for everybody. That's my contact information. Okay, if you want to copy it down right there, take a screenshot. All right, but I just clicked it. It's working, guys. Take a look. Let's see what else. Yeah, guys, honestly, I really have nothing else to add. Hopefully this was helpful. Hopefully everybody learned something. If you have any questions about commission or affiliate program, we do have other Zooms and webinars about that. And we also have Facebook groups, guys. We have all the normal social media outlets. So just reach out to me anytime you need. And I'm here, guys. With that being said, I'd like to wrap this up. I know some people are going out to dinner or they need to go to dinner, and some of the West Coast is still going to work. I want to thank everybody for joining. Tune in next week. On Wednesday, I'll put the next topic out there. If you guys have any suggestions for topics, drop them in here. Also email me, text me, DM, carrier pigeon, whatever you guys need. But I want to bid everybody good night. Have a good evening. And I'll speak to a bunch of you soon. Thanks for joining, guys. Have a good one.